fresh lows coming in for the Indian rupee. Rupee did cross 72 to the US dollar. In fact, the bond yields also continue to hover over the 3.5-year high. We did see that the dollar index did ease slightly, but it still continues to hover around the 95 odd levels. Brent again continues to be around the $77 per barrel level. So hence the high oil prices and EM currencies also being under pressure has aided this entire rupee depreciation. We did see some amount of respite, although coming in trade in some of the EM currencies though. Having said that, we're speaking to various experts across the board and they're stating that, for example, ANZ does believe that the fair value of the rupee is somewhere around 73 to the US dollar. However, the pressure on the rupee depreciation may still continue in the near term. Axis Mutual Fund does believe that earlier bond markets were only pricing in one rate hike, but now it seems that the bond markets are pricing in 2 rate hikes as RBI is using the forex reserves fairly judiciously. They're also stating that there is a potential for the rupee to overshoot beyond the fair value of the rupee, and that if at all RBI does not intervene, then the only option that RBI does have is to hike interest rates. In fact, Nomura states that they do see continued INR depreciation, but they're also stating that RBI probably has space for another 20 to 30 million US dollars to be used of the forex reserves, and hence probably RBI may use the second line of defense, which is to hike the interest rates amongst other tools. FM, however, has mentioned that there is no need for any knee-jerk reaction on the rupee, and the rupee depreciation is also on account of other EM currencies coming under pressure. Having said that, rupee of course hasn't depreciated as much in the last 5 years as other EM or Asian peers, but as of now the near-term depreciation on the INR is likely to continue.